It's like SoFi beat guided. Good morning and welcome to another edition of Roadhouse Live. We are live. Today is July 31, the last day of July 2023. That means there's going to be no more days in July for this year after this day. Whew.
Now, aren't you glad we covered all of this last week when you thought it was the last day of the month?
You know, it's like it's just second chances. That's how you have to look at things like that. Second chances.
What's that? You need to learn that little song. What's that little song like? There's a way you count your knuckles or something. Didn't they teach that in elementary school? Like,
yeah,
there's a little jingle. I don't know it, but
there's a little jingle.
Yeah,
there's always a little jingle.
There's always a little jingle.
Possibly a jangle. Definitely a dongle. So we're coming into a week, last day of the month. Chart wise, everything looks fairly neat. Last night, we had a little bit of a sell down that got bought back up to bring us back to, let's just call it par for the most part. News wise, not a massive amount of news floating around out there. It still feels very much purgatory-ish from a news standpoint. Really not a whole lot. SoFi reported this morning, reported well. That's always a good sign to see some of the smaller banks, doing well. We do have AMD tomorrow. We get Apple and Amazon this reporting this week also. So we still have some behemoths yet to report. One thing that I find a little bit curious and interesting is the dollar and how it's kind of shaping up to where maybe, just maybe, the dollar is going to come back into fashion. We've said this multiple times, but it has put in a little double bottom here. It does not really want to stay underneath a buck. It is not. It has no desire to in a real way. But
the dollar doesn't want to stay under a dollar.
Does not. It's okay. Like, no, we worth more than that. And
well, a dollar.
Hey, man, I don't make the rules. It's like that's just the way it's acting. So there's some areas on the dollar that I think that we should actually kind of be aware of. It's like last night it was trying to do some things, but it has sold down a little bit from the overnight. That a move up, let's call it another, I don't know, what do we want to call it? Another 40 cents higher would probably make it a little bit messy for the NASDAQ and some of our equity friends. So let's pay attention to the dollar movement today and how it wants to move around. VIX again, sitting relatively flat, really is not a part of the picture, even though we did see last week what'll happen if the VIX decides to wake up and move. We get some wreckage. We get some pretty damn good wreckage associated with it. So little things like that I'm looking at. Again, we do have a little bit of data coming out 15 minutes after open. And then there's a little bit more after that. Not big market moving type data, but data that could, create a candle or two. So with this being said, Bender, why don't you walk us through what you got, what you're seeing, and we go from there.
All right. Here we go. first chart I have up here right now is NQ daily, and you can see this daily fair value gap in here. The top of that being 15, 9, 11, 25. There is a volume imbalance right in here. And a lot of times, when we see these volume imbalances, we look for, a candle to get kind of laid across it, but it can take a while. You can see down here, there's a volume imbalance right down here that didn't fill back in. So I'm looking at this because we came down and we filled this daily candle, this daily fair value gap, and then back up into this candle, right? And so now it's like, okay, if we get up above this, yeah, we can jet, right? But it's anticipated that there is resistance in here, and it would not be surprising for it to pull back a little in here. It doesn't have to. Obviously, it can just moonshot right here. Mm-hmm. But if you were looking at an area, okay, we had this daily candle pull down. We messed around in here. We filled in this candle, trading right up into the top of it. So, I will be sort of eyes open for the potential that maybe this doesn't break out just yet. Going over to the ES, here's a 15-minute chart. And what has my attention right now is here on the 15-minute, you can see this candle, this 15-minute down candle right here, left a fair value gap behind, traded up into it. That became resistance. It pulled down, and it left a fair value gap right in here. There's also one here, right? And a lot of times, one of the things ICT says is when there's two fair value gaps behind, you wait for at least for the first one to get filled before you would take a position. So on something like this, if you were looking short, you'd wait at least for this first one to get filled, and your stop would be above the candle that left the second one behind. So that's kind of all the way back up in here. But what I'm looking at is, again, this 15-minute down candle here that left that fair value gap behind, that became resistance. Then you've got this 15-minute fair value gap right here. The shaded box you can see labeled as a 60-minute. Go to the 60-minute. You can see this candle right here being that fair value gap. So back to the 15-minute, we are trading above this 60-minute fair value gap, but you can see we're trading into this 15-minute candle right here. That's this blue shaded box. So what I'm going to be watching for is to see if we can get through this and get above that candle's high at 46.25 and hold it. Then we likely take out these highs from last week, and you have the high from April 21st, 2022, up here, 46.38.25, and that would put us kind of just under trend line resistance right in here. You can see we popped it and then pulled back down, popped it, pulled back down. This is that longer term trend line. So if it decides to rally, this area up in here, I think would be, head on a swivel. And then just a little higher, 46, 49.75. You have the 786 of the bigger down move on the daily, which we've shown a few times. If this holds this resistance and it starts pulling back, obviously you can see this 15-minute fair value gap right here. I'm sure there's some on the 5-minute. So far this morning, the move has been to fill in these 15-minute fair value gaps and then run higher. So I'm going to be looking for signs of, if it's not going to rally, if it's going to come back down, this 15-minute fair value gap, I'm going to look for if it breaks that. If it breaks below this candle's low right here, 46.13 half. If it breaks below that and that becomes resistance, Then I'd be looking at the Asia session low down here, 45.95.25. And then below that, you can see this blue line here, 45.89.75. If I go to regular trading hours, you can see there's this gap in here that we left behind last week. So below the Asia session low, then you've got the kind of the top of that gap, 45.89.75. Below that could see us filling in this gap down to 45.69. So that's about 50, a little less than 50 handles from here down, and about 40 or so up with targets in between. So that's what I'm looking at. That's what I've got on the ES, what I've got on the NQ. I think that's about it.
It's really interesting because we had last night. It's like the Asian markets were definitely hot to trot. They were definitely gunning last night to the upside, which is very, very curious that we basically retraced a decent amount overnight. And then obviously, made a little bounce. But you had the Nikkei up 1.3, and you had the Hang up 0.72. So those two were definitely, drivers overnight. Europe, had a, I'd say, more flat than not overnight. And so we come in and it's like earnings continue to come in okay. Data continues to come in okay. Ben, do you have actually, let's go to Sunny. Is Sun here or is it just you and I?
I don't think so, but I do have his notes.
What, he sent the notes to you and not me?
Well, he sent them to all of us. I just happened to read it.
What the hell is going on?
He sent it to all of us. Okay, so here's what he's got. Upgrades, Adobe, Morgan Stanley upgrades to overweight from equal weight. Price target 660 from 510. CVX, Goldman Sachs upgrades to buy from neutral with a $187 price target. GDRX, TD Cohen upgrades to outperform from market perform. Price target at $12 from $650. Wow, that's a double. TCOM, JP Morgan upgrades to overweight from neutral with a $50 price target, was previously $39. BRRM, Deutsche Bank upgrades to buy from hold, price target 26 from 21 for the douche bank. Piper Sandler upgrades overweight from neutral on W with a $97 price target from 35. Wow. And then XPEV, JP Morgan upgrading XPEV to neutral from underweight. Downgrades, Morgan Stanley downgrades CRM to equal weight with a $278 price target. Previously $251. So they downgrade to equal weight, but then a higher price target. DSX downgraded by RBC to sector perform with a $35 price target. Carvana downgraded by Jefferies to underperform with a $30 price target from 55. Oppenheimer downgrading GE to perform. Bernstein downgrading Love to perform. Credit Suisse downgrades UPS to neutral with a $204 price target from 200. And UBS downgrading XPEV to neutral with a $23 price target from 12. So another downgrade with a higher price target. XPO downgraded Bitcoin, sparking a dispute over crypto regulation. I'm gonna have to read a little more into that one. I saw that headline. I was like, wait,
yeah.
what?
Did they respond back? Eat a dick?
I don't know.
Like,
yeah,
you're gonna ask us to do something while you're suing us? Why don't you fuck off?
Yeah. And by the way, whose pockets is this gonna line?
Right.
Okay. Amazon doubles same day delivery sites, boosting speeds and driving increased purchasing. Italy's competition watchdog accepts Google's commitments in user data portability case. I haven't really been following that, but And then it says entertainment giants have explored partnerships with AI players like OpenAI, Runway, Stability Diffusion, and Adobe. Wow, because they have to.
Mm-hmm.
And lastly, oil inventories are beginning to fail in some regions as demand outpaces supply, constrained by deep production cuts from OPEC leader Saudi Arabia, providing support for prices which are expected to rise in coming months. So fill your gas cans. And that's about it.
And that's about it. And we don't get Stonk either, correct?
He's here.
I'm here.
Oh,
What's up?
great. Fucking Stonkington. All right, Stonk. Huh. Huh.
Close
That
one.
is not quite the welcome that I would like. If somebody was like, "Oh, Bender's not. We don't have Bender this morning," and then someone else was like, "Oh, Bender's here," and Hells is like, "Shit." Like that's not what you know.
You're right.
Stung. I'm glad you're here. I'm glad
right.
you're here.
You're right.
And you're
You're
gonna.
right. You're right. You're right. Hi, Stockington. How
hello.
are you?
I'm awake. I'm ready.
We're so glad you're here. See?
Hope so. Let's get into some stuff. Let's see. We'll look at some charts. Here we go. All right. Let's see. We can talk about a possible smash day here to the upside on the SPY. Again, smash day, it was going to be always a failed breakout kind of setup. And so when this candle on July 27th closed below this low, that would give us a smash day if we were to break this high right there. Whatever that was on Thursday, that would be our potential entry up there, 459.45 as a failed breakout. So we've got a little ways to go above there. Something to look at on the SPY. Let's check out on the Qs. Similar, although actually that one looks like it technically would not be a Mystery Larry Williams smash day because we didn't close below that low. But we could be looking for a break of that July 27th high for more upside there on the Qs. Let's see. So if we jump over into the NASDAQ, Bender mentioned this volume imbalance that I have highlighted right there. Kind of funky. Got a lot of lines here, but that's what Bender was showing there when he first pulled up the NASDAQ. If we switch over to the hourly here. So there's that same volume imbalance there, the pink box. This pink box below is the new week opening gap. I was looking for them to run these stops here, which you could see that they already did it. This was like just way too clean, these equal highs. And so they popped it and pushed it back down overnight. So they took whoever's short stops were break even on that line, which I was kind of expecting would happen. But now it's like, well, do we have to go hit this guy's stop? So I'm going to be kind of seeing if we get up here, what we do with that 15,917. Then we've got downside. We'd be looking for the new week opening gap. And then the next fair value gap below is going to be this 774.50 down to 701. And then kind of been starting to build out a new trend line here. We've got a bunch of taps below, and then maybe like a megaphone going to the upside on the NASDAQ. If we jump over to the Russell.
Bag of dicks.
Big old bag of dicks. We've got the new week opening gap, pink box. We've got this kind of expanding megaphone type setup, tiny fair value gap with just a little bit of room left above up to that 1998.90. And then if we slice down through the new week opening gap, we've got this fair value gap area here with room down through 1976.90. So we'll see what we get. We just ran these stops, it looked like right there. See if we get pushing to the upside. Let's see what else. I put out an idea for a longer term swing idea on EEM. Let's see. I guess I'll do it over here. Let's put on. Go. All right. So end of last week, we saw 45 call buyers for March 2024. And so I went back and tracked all the dark pool from the month of July. which started down here at 38.85 and then finished at the end of last week up through 41.95. That's all dark pool totaling $4.2 billion. And then they've got some really nice flow into the 45 call strike for March next year. So they'll be looking for a move up through here in the next, 8 months or so. So I think there's potential, but it's going to be a slower mover. So I think there could be a trade over there. Let's see what else. So we've got big ER week. Let's see, Apple. So I mean, kind of going to be waiting for Apple to report. So with that in mind, I think I cleaned up some of these other charts we can check out. Microsoft is definitely off my boring to trade list. It's been a lot more entertaining lately. So we'll see. I had some lines set up here on, some lines set up on Microsoft, and just going to kind of give it a watch it here. Almost got like a left shoulder head, maybe working on a right shoulder, inverse head and shoulders type setup. I'm going to be watching for it to hold this 337.20. And then if we're going to push to the upside, I'm going to be looking for this 341.55. Downside, if we lose this put trigger, then next we've got some dark pool below down there at 332.89. Kind of very compressed here, maybe a little bit of a flag. Other than that, going to kind of just see what we get and check on the flow. That's all I got.
Sounds good, man. Bender, do you mind doing me $1?
Doing you $1, sure.
Yeah.
Let's see.
So there's a reason for wanting to get into the dollar a little bit. If rates have peaked, right, and this is where it becomes really squirrely. If rates have peaked, then the dollar should start pulling back. Now, the fact that the dollar doesn't want to go under $1 makes that even that much more interesting. So when the narrative becomes kind of conflicting, we have to go back and ask the question, what are we doing? Where are we going when it comes to the dollar? Because we do know that it has a massive impact on corporate earnings, especially for global companies. What are you seeing in through here, Bender, on the dollar?
Take a look. All right, so here's fibs on the dollar on the bigger move here on the daily. And you can see we're right in that 50 to 61.8% retracement level until it gets below that 618, which would be 99.22. This is that area where if they were wanting to if there are folks that are sitting out there going, I want to be long the dollar, I was waiting for a pullback. This would kind of be that zone, right? Mm-hmm. So you're going to get, both sides wanting to play ball. You can see these down candles here on the daily. Perhaps all it's doing is the fact that it's inside of that golden ratio area. Perhaps it's just filling back in some of these, daily fair value gaps left behind, because this was all one-sided action, just straight down. Let's throw some fibs just on this move right here. So you can see just on that move, the bounce was right to the 618.
Mm-hmm.
Right. So, this bounce right here, let's see if it stay where we at 101.75. So bigger picture is that's the short right there, 102.052. And you don't want to see it. If you're bearish the dollar, you don't want to see it pop above that, because then the next level would be that 786 up here, 102.74.
Right.
So potentially you got this waterfall sort of down, right? Just down. So this was kind of that forceful push down. you expect to see a bounce somewhere after a move like that. So then it gets a bounce, comes back up to the 618 of this down move. You want to see that hold as resistance.
All right. Yeah, the dollar is going to, to me, is going to be interesting how it kind of shapes up. Very, very interesting. You can see it moving kind of in either direction, but ultimately, I think the question really becomes is what is a dollar? What is, how does the landscape work when we have improving data or solid data, which is good for the dollar, and we have rates coming down? It's like this. So there's this in between that the better the data, the hotter the dollar. I think we just have to be really, really aware because the narrative is so jacked when it comes to that. I think the chart is something that we need to be very, very aware of. If it breaks out of this little falling channel that you have up here, Bender, I think there could be some legitimate wreckage that comes
Sure.
through on the other side for us. So thank you for showing that. That helps me a lot as far as kind of looking if we start, moving up against levels of resistance and the dollar's looking like it wants to be poppy. Got to be careful. Got to be really, really careful. So that's all I got. You got anything else? Donk, you got anything else?
No, I'm
For
good.
me.
Stonkington, thank you so much for joining us this morning. I really want you to know how much I appreciate you. I think you're one of the greatest people that have ever existed on the planet.
And you should just ignore his previous reaction when he found out you were here because he didn't mean it.
Yeah, no, I did not mean that. I did not mean that. That was just a really, really bad person. I don't know what came over me, Stonkington.
Well, glad to have you back.
Very good. Very good. All right, everybody. Today is Monday, which means we get to decide what our week is going to be. We get to decide. We get to choose whether or not we are going to sit here and bathe in greatness or wallow in pity. Which one shall it be? Only you will decide this with the clicks of the mouse. Your little fingers, your little diddles will decide your greatness. That's all I got. We'll see you guys soon. 13 minutes.
Thank you. Yep.